Global Chief Market Strategist at ATFX. Let's take a look at the markets. We just had some UK data out, and just looking across the board here, we're just looking at the data. So the employment change was 32,000 versus job creation was 32,000 versus 10K anticipated. And unemployment rate remained unchanged at 3.8% as projected. Bonuses though increased slightly by, salaries increased by 3.1% annually versus 3% anticipated. And excluding bonuses, that's what I want to say, salaries increased by 3.4% versus 3.1% projected. So slightly better data than expected. As for the GBP versus the USD, the market following that release, which was here at 9:30, the market is up with about 20 pip right now, 19 to be exact. So that's good. You know that the labor market is good. In fact, it's been good for quite some time in the UK. The labor markets, I think, it hasn't been the unemployment this low for a very, very long period of time. Now, obviously, the controversy where the low unemployment rate is that the fact that there's been jobs created, right, but it's not of the same high quality as they used to be. Okay, and I'm thinking about people working with something like Deliveroo and Uber, which of course, they're jobs, help people to pay the bills and everything, but it's not sort of the same high quality jobs as they used to be created. The thing is this though, this is not just issue for something like in the UK. In fact, it's an issue in many parts of the world, and particularly in the Western world. And because of that, and because we haven't had too many so strong wage growths, the Bank of England over the last few years have been reluctant to raise interest rates. But if you look at the numbers now, I mean, they are quite good. 3.4% excluding bonuses. That's a healthy little move to the upside. So what's stopping them from sort of making changes to interest rates? Well, firstly, investments are very low since the Brexit vote in 2016, and Brexit in general sort of is creating problems here, and that's sort of why they're holding back. But I think if it wasn't for Brexit, then we'll probably seen a bigger reaction in the GBPUSD, and maybe the Bank of England would have been slightly more hawkish, but not very much more hawkish, but slightly more hawkish. The way things are right now, they're looking to raise interest rates, I think, once per year over the next few years, and that's just to keep inflation in check. Trading wise here, again, the data was good, so that should underpin a bit of pound strength. And I think technically here, to see a bigger move than the small few pips we've just seen so far, we need to trade above Friday's high, which is the 2764 level. If we take that out, I think that's when people are going to feel, well, that's when the trend turns more bullish, because you have a high here and another high here. So we take that out, you create that higher high, and you already have a higher low, which is this one here. Is it possible to go along now? Yes, it always is, but probably won't amount to much. It could go up and break, but most likely it will just trade sideways here. Now, that's my view on this. The alternative would be, if you're really bullish, then maybe looking to buy down here. But I wouldn't really be doing that. I just like that move and like this move here, which I think becomes more relevant if it looks like we're gonna have a hard Brexit. So that's the scenario. What we added, let's take a look at Euro GBP. This is Euro GBP, and it's just been trading sideways for the last few years, and this is just your weekly chart. So this is the Brexit referendum, summer of 2016, and the market, or the pound, is still weaker about 17% since then. And you can see here, there hasn't been a lot of development. In fact, it's sort of lingered around here. Literally, it's pretty much where we were following that referendum. I think, and this obviously driven up food inflation and things like that. And here, guys, as I said, in 2017 and in 2018 and now in 2019, it's a sideways market, very difficult to trade, hasn't been fruitful if you want to trade with breaker systems at all. it's just sort of reversed back to the mean. The problem is, of course, that sometimes it sort of breaks out from the range, but then sort of goes back into it. Then maybe we head a little bit to 0.90, but until we get some sort of deal, so maybe by October, either an extension or a no deal Brexit, then we're gonna probably remain within here. The more likely thing is that we're gonna get some sort of extension. That's what I would guess. So probably more sideways for longer. So unfortunately, no good opportunities there either. Let's take a look now at the euro versus the dollar. So yesterday I said that people are probably going to buy at this first fib level, which they did. I'm sticking by that. The market may go down and test the same fib level. It might even test the 50% and the 61.8% correction, but we should not really trade much lower than these ones. And I would be actually quite interested to put the stop loss just here, but I don't want to be too close to all the action. So I remain bullish. I think we can go upwards. It looks like we are trying to break out of this wedge, but it's not looking that good. In fact, this is very poorly so far. I mean, this is not what you would anticipate following a break of a wedge. So it looks to me a bit of a false move, but at least in the short term, the trend is bullish, and we might see this continuing, but it's not really something I'm trading right now. GBP versus the USD, stock markets are up. They've been up. They continue to trade upwards. I think here that this market might go a little bit upwards as well, and maybe from 109.96, 108.96, we might start to see this market rolling over. We had the bad non-farm payrolls, bad ADP numbers, bad market PMIs. I'm not really sure exactly why the markets are not much lower, and the market can remain irrational, or maybe it is fully rational because no one really knows exactly what's going to happen in the future, right? But I think given the market conditions today, I would have guessed that stock markets in particular and the dollar yen will be lower. Well, not dollar yen necessarily, but stock markets in particular being lower. I still think that maybe eventually we're going to have some sort of more bad data, maybe when we are in this zone, and from this zone the market may turn lower. For now though, it's correcting. Gold prices, I think they're gonna peak, or they have peaked, as I hinted about yesterday. The idea was just to buy here for us to go upwards. We had several opportunities to get out on June 5th and on June 7th. The numbers from the US, again, they were bad, but look at the market. It's going downwards instead of going upwards. It could be that you have all this massive amount of resistance here. That's probably the number one reason, and I guess people are not fully convinced that we're going to head into a recession. Maybe it is that they think that the Fed is going to cut rates 2-3 times, and then that's going to be what's going to support the economy. It could be, it could also not be. I don't think it's going to be that's going to be the case. So I'm guessing now, the way this looks like, we're probably going to trade below 1320. If we do, probably going to see more people that will long here getting out of the positions. They're going to push price all the way down here. So if you're a scalper, maybe this could be something. It's not sort of high quality opportunity, but this could be something. Trading the difference between here and here. And then we're probably going to settle somewhere here. And then this is going to be treated as a range. It's going to be something like, all right, let's turn bullish there, and let's turn bearish like that. Alternatively, we can take a fib like that and say, okay, let's maybe buy down here and then target the highs. I think that, I guess, could be something more reasonable. Just looking at something here and then potentially upwards there. But we can deal with that when and if we come down to these levels. Here are crude oil, right? West Texas. So yesterday, unfortunately, the market traded above that trend defining level, and the downtrend is now not as strong as before. It does look a bit like GBPUSD, take out these two levels, and that's when you get that proper short squeeze. So a bit like here, take out this level and this level, that's when the market should go upwards. Now, if you look at this right now, it can go up quite a bit actually, percentage-wise, 4%, maybe a little bit more. But I think maybe up here, I think traders gonna short sell again. If I'm right and the data continues to underperform, then we're probably gonna go up, and we're probably gonna go down again, and we're sort of gonna be stuck between these two levels. So that, I think, is the next natural thing for this market, to do something like that. If I'm totally wrong, what's gonna happen is it's gonna go up probably and then down, And whenever the market stops creating these lower highs, we'll turn bullish. S&P, very, very bullish. I think it's really sort of squeezing people out. Probably a ton of hedge funds and people like that that are projecting a severe recession. Um, there's not too much we can do here. It's just people getting squeezed out. We need to take out these highs before it becomes really interesting. And I think what you can do here is you can look around. There are other markets where you don't have these resistance levels. And that's what you want to be looking at, because if you buy here, I personally think it's still going to go up and then just roll over. That's what I think. But if I'm wrong, it might go up, it might squeeze, and when we break this level, I'm going to turn bullish. But there are markets already now that are literally here and pushing upwards. German DAX is also bullish. So I was bearish up to a few days ago, and then I turned bullish as it didn't work out. Now the market is going to the upside, is challenging this high again. It's much like the other markets. I wouldn't be buying at these levels. You need a bit of a pullback before doing anything here. And I think that's pretty much it. So we covered all of the main markets. Let's see if you guys have any questions. So we have Anna's Dora here. So Anna says, talking about the pound, what's your view on the pound against the Japanese yen? Let's take a look at the pound versus the Japanese yen. So this is the pound versus the Japanese yen. And as you know, I've been bearish from these levels here. Let's take a look at it from a big picture perspective. So from a big picture perspective, there was a bit of a head and shoulders. I'm not sure if it actually is a head and shoulders anymore. There's been several of those. You see, head, left, right, false move. Then you have this one here. If we ignore the flash crash, I think realistically we're still gonna go lower, but not from current levels. So let's get support here. You have the flash crash low, and then you have this level down here at 126.70. If you look at this from a 4-hour perspective, the market trade lower here, right? And the way this looks like right now, I think it's in the process of bottoming out. So in the short term, we are dealing with the short-term uptrend. You have the market being short-term bullish above this level here. So I think this could probably, I would give this another day or two to sort of mature into something that is more than just this little section here. Ideally, it would do something like this. Actually, there's no real optimal, but you have this section here. Let me see if I can. So you have this high here, which is important. You have this high here as well. But I'm not sure actually how important this level is. I think the best would have been if this would have gone up and then down like that. Because then you have a very nicer, well-defined section here and a nice, well-defined section here. And then from these levels, probably push upwards. It would not be head and shoulders because this one is too shallow, but it would definitely sort of mark the end. Now, the way this is looking now, I think still though we might just go up maybe. I think maybe up and then down and then potentially upwards. But fortunately, I think we are maybe 2 days too early on this one, because the market could take out this low here and do like that. That could easily happen because we're still dealing with the downtrend. It could just be a corrective move, but it does look like it's stabilizing. I will give this 2 more days to sort of take a decision here on what's going to happen next. Okay, so I think we're going to wrap things up. So guys, we're about 10 people watching and there's 7 likes. Guys, you're making me very happy today. Anyone else just watching here, don't forget to hit that like button. Anyone else here that is not registered on YouTube, make sure that you do register on YouTube. That gives you a little notification when we're live. You just need to subscribe to the ATFX channel. Very straightforward. You get this little notification here as well. Very straightforward. And as well, don't forget to follow me on Twitter at AlexFX00. If you have any questions, of course, you're most welcome to reach out to me via Twitter. And I think that's pretty much it. So we're going to wrap things up. Guys, I want to thank you so much for watching. Anas, thanks so much for your questions. And I'll see you and everybody else hopefully tomorrow, same time here at ATFX.com. Thank you. Bye-bye.